begin with, let me first thank the organizers for giving me this opportunity to present my case. So when Ambreen approached me, I thought that it will be a good idea to present how do we build the bridge between credit and collections. I could hear a lot of speakers talking about the feedback loop and everything else. The learnings from the collections can go back into credit policy and so on and so forth. We also heard about how collection strategy should go back into the business strategy. So I know for sure that yesterday also a couple of sessions which has happened, and I think Rupesh also talked about collection strategy should go into business strategy. So I'll try to cover that as well into my presentation. Before I jump into my slides, 2-3 quick points. One is that my experience is largely into retails, and that too in mortgages. So most of the points that I'll be covering would be woven around that, and therefore some of the things which are related with perhaps CV loans, etc., might not feature there. But let me try to cover as much as possible. I'll begin with the share, since I heard perhaps Mahindra saying that I think, and Rupesh also mentioned that the time has come when collections should be given the respect that it needed. Bhagwan जाने ये कैसा चांस हो गया, भगवान जाने ये कैसा चांस हो गया, बात करते करते रोमांस हो गया, आज फिर उनका फ़ोन आया है, लगता है मेरा EMI का चेक बाउंस हो गया. Okay, so starting with business strategy, I've been part of discussions on business strategy at Mahindra's, purely in Mahindra Home Finance. What I could understand is that at times when we look at the business strategy in NBFC or any housing finance companies, at times we don't keep the collection strategy into the frame. I happen to talk with several fintech founders. When they will ask me, if you were to design the credit policy of our fintech, what will you do? The first question that I try to ask them is, just tell me two things. One is, what would be their customer segment? Second, what will be your collection strategy? You tell me these two things, I can frame the credit policy accordingly. So therefore I try to picture it here, but let me emphasize this with this quote from Peter Drucker. It says, culture eats business strategy for breakfast. This is what I said. Collection can gulp credit policy like an eat, drink and won't burp. The reason is that if the collection strategy is not good enough, if the collection infrastructure is not good enough, howsoever good credit policy that you design, it will never work. And therefore, when you design a business strategy, the lever of collections will always be parallel with the credit policy. Whenever we are designing the business strategy, normally credit policy and the collection policy or the collection infrastructures always look at times in different direction. But I'll argue it should be something like this. And therefore, if you're asking two questions, somebody asks in the morning, how do you assess income for a customer in the rural segment? So let me answer it here. Do I have the ability to assess the income of a customer? And second, will I be able to recover my money from the customer of that segment? But normally these two questions are asked separately, and therefore at times we'll see that by the time we have reached to a particular portfolio level, we have already seen a delinquency in the portfolio, and therefore the real thing should be this. The credit and the collection, the question should be asked at the same time, do I have the ability to assess the credit risk of this customer segment, and will I be able to recover my money from this customer or not? What is the relationship between the credit decision-making capabilities and the collection ecosystem that I currently have? If the collection ecosystem is strong, my apology, the strong has basically wrapped it around here, it should come there. If the collection ecosystem is strong, I can easily have slightly liberal credit policy, and therefore on this quadrant, I can easily command high growth, high profitability, and therefore the relationship between the credit and the collections plays its part, and I can have a better business strategy execution. The stronger the collection team, the higher the ability to take credit calls. Higher the ability to take the liberal calls, better will be the profitability. Higher the profitability, bigger the scope of launching new products, and therefore the fourth quadrant can be easily achieved. One of the biggest problems that we see whenever we think about the collection infrastructure, we think that strong collection means very high OPEX, but that is not the case. There should be a process orientation, the efficient and proactive use of technology. In the panel discussion, one of the major points which was discussed is that how do we incorporate the feedback loop in designing the credit norms, and therefore how do credit and collection work together. So this is one of the things that we follow in Mahindra's joint collection visits. For example, think of this scenario. As a credit professional, if I force a customer to repay through NACH from his crop loan bank account, the bank account from which the crop loan interest is debited, what happens there? This is about the rural customer. Why collection visits are important for credit team is this. Think of this scenario. The moment you take NACH from the bank account from which crop loan is being repaid, the moment the customer puts money there, the banker debits that money and takes that money for the repayment of the crop loan, and your EMI gets bounced. These kind of insights you can only get when you are doing a collection visit with the credit, and therefore the feedback loop can get back into the credit policy, and instead of you insisting at the time of sanctioning that loan that repayment should come from the main bank account of the customer, you can ask the customer to repay through different bank account. Another thing which clearly comes out from the collection visit is you will get the reinforcement of the credit calls that you have taken, and therefore, for example, last week I was in Andhra Pradesh, one of the small villages on my way to Warangal. One of the loans that I approved was to auto driver. That loan went into 30 plus DPD. So I thought that perhaps I should visit this customer. When I visited that customer, he told me that he could not pay because his son just got admitted into an engineering college and he was going there to drop him, and therefore his EMI got delayed. Now, sitting afar, if I was sitting in the back office, I would not have gotten that kind of insights, and perhaps I would have blacklisted auto drivers in my credit policy. And therefore, the joint collection visits reinforces whatever underwriting calls that I have taken. Collection feedback, which can actually again go back into tweak and always change my credit policy in order to align them in my business strategy, as well as making sure that my portfolio remains almost spick and span. Another thing that collection feedback helps in credit is knowing who are the troublemakers, what are the negative areas, and what are the calls that I don't have to take anymore. So the feedback loop, I think it has helped us immensely in terms of taking credit calls. Credit scoring, one of the things which is, I think, I have experienced a lot, and let me share one of the anecdotes. Back in the day, somewhere around 2015, there was a challenge in the Mahindra's innovation lab, and they said that, can you develop a credit scoring model for rural customer? Our data science team and we sat together and developed a credit scoring, and then there was a presentation, and Mr. Anand Mahindra was walking through there. He came to our stall, and he said, can you generate my score with your credit scoring model? So it was developed for rural customers. So we said, sir, you are not rural customer. He said, no, I have a agri land. Why don't you score me? So he gave some data, and we scored him, and he came out to be a highest risk customer in that credit scoring model. A person of Mr. Mahindra's stature came out as the highest risk customer in our credit scoring model. The reason was simple. We built that model based on the data, which was only for the rural segment of the customer, and we tried to assess a customer who was not rural, who was very affluent customer. And the thing is that the data science, we have been listening to people, and AI, ML is the talk of the town. But my sense is the data science is not a magic wand. Unless there are necessary questions which are being handled in the scoring models, it will always predict the wrong thing. And I have seen this. The model that we developed did not take care of the collection efforts. One of the examples I can give you is that, suppose if you build a credit scoring model for the entire India, in Maharashtra, there is a collection challenge which is happening. You need special collection effort there, and that credit scoring model doesn't take care of that. Then that model is bound to fail. Quickly, 3 points since my time is already over. There are 3 different things which we at Credit handle on daily basis based on the collection feedback. The false positive. One of the things which we very commonly face is that in some of the areas, if collection is pick and span, portfolio is running actually absolutely fine, and we live in a false comfort zone, taking very liberal credit calls, and suddenly we found that not everything was hunky-dory there. So therefore, the false comfort is something which can actually come to bite you, and we have seen this several frauds which have happened in the industry. Zero aging, entire portfolio performing absolutely well can be dangerous also. Second is, can't throw the baby with the bath water. That means if I have seen 1 or 2 incidences in my collection visits, I cannot paint the entire set of customers with the same brush, and therefore it should not be that I start rejecting a lot of cases. As a credit person, I'll have to think about that also. Past that haunts you. At many times, what happens is that in some of the areas or some of the geographies, if you have in the past, you have find that portfolio has behaved really badly for several reasons. There were shocks in the economy, there were disruptions in the market, the pandemic, etc. Even if that your hands are shaking while signing off that loan, you should look at the customer rather than anything else. Quickly summarizing some of the shared metrics that credit and collection should always follow. Everybody knows about it, but they know about it only in the parlance of collections. I am arguing here is that these should be shared with credit also. The non-starters, the early mortality, the zero aging. Normally what happens is most of the people follow 1 bucket, 2 bucket, 3 bucket, but I would argue what should be the real metric should be how do I maximize zero aging, and last is collection effort index. 1 minus percentage of the payments. I am saying payments, that includes cash as well as ACH clearance. 1 minus percentage payments on the due date is the collection effort index. The goal should be to minimize that. Just to sum everything up, everybody said the collection should get the respect that it deserves, and many times we think that collection is at the far end of the spectrum, therefore is neglected. I would argue that collection is the tail that can wag the dog. If collection goes haywire, the entire organization can come down crashing, and therefore my respect always increases whenever I visit with my collection colleagues and meet with their customer. Their job is really very hard. I've seen them, working day in and day out. I'll be finishing with just one example which I've observed recently. One of my collection colleagues, he went to the village, asked the customer, why are you not paying? The customer says, my crop is not selling. He said, I'll get your crop sold. He went to the customer, to the mandi, got the deal done, got him the cash, collected his money, paid back to the Mahindras, and close the case. So that is the kind of effort that collection teams do.